Well, well, well. What do we have here? And if you're wondering why there is a big thumbs up on the screen right now, it's probably because you are not subscribed or you don't have those notifications on and you didn't catch my midday update, which actually pointed out this divergence right here. That's right, around 12:30 today, I actually put out a video calling a bunch of reversal signals that happened this morning, and we really wanted to get that info out to you guys. So thank you if you are a part of my Patreon, which is down in the description, because you got that information at 9:30 this morning, which is very, very good. I hope that information was helpful to you guys. And what we were pointing out in that video and why we're giving this big thumbs up is because you are someone who pays attention to these types of signals. And sure, we've seen this signal a bunch of times, but you have to pay attention to every single one and see if it's able to get down into negative territory. Now looking at the SPY on the 30-minute here, you can see this big downturn and no one can really explain why, which is kind of scary. I actually tuned into a live YouTube channel where they had 10,000 traders watching and no one in there had a good excuse for this move, which actually scares me a little bit. And I'm actually going to talk about what we've been talking about on this channel for the last week that could be happening when we get to yields. So stick around for yields at the end of this video so we can tell you what we think's going on and why this move is happening. But first, we got to give you guys that technical analysis for the SPY cues, Apple, Tesla, Amazon, and Nvidia, and we're going to hop right into it with the SPY. Before the week began, we were talking about two scenarios, some kind of head and shoulders setting up at lower levels to then go higher with the GDP, or even that data coming out on Friday, or it could be some kind of other route, right? There could be actually some kind of left head and a right shoulder form with the GDP that actually breaks us down. It looks like something like that is happening at this point. Overall, you just have to say on the shorter time frames, my signals have flipped to bearish, right? I'm getting sell signals. I'm seeing the crossing of the MACD. We're getting down into negative territory. So there is a lot going on. The thing I need to pay attention to in the short term is we are oversold and we get GDP in the morning. So you are inviting some bullishness to come in the morning, but it's going to be very confusing as no one knows why this dropped. So if this full measured move of a head and shoulders here actually did play out, we would actually head directly for this zone, which has a good amount of liquidity, which might be where we want to base out and go higher, which we'll pay attention on the daily and mention that this weekend, or we might want to drop lower, confirming some bearish things on the weekly chart that we've been discussing for a couple weeks. Important thing with the SPY as of right now is you're right at that monthly expected move, and we could see that actually close back within this yellow line before the end of December. So if we wanted to close somewhere within these yellow lines here, this is the top side of that expected move for December. So we do like to close in that 68% of the time, and somewhere like here would not be a bad place to end up. Now, in a short squeeze, you can get a lot of divergences, but when they start to get closer and closer to that center line, you have to start to pay attention. And that was the overall reason that I posted something on my Patreon. And that's the overall reason that I posted a video this afternoon, was because I had some free time and I said, whoa, I am seeing some crazy things. And we actually are heading up towards that point where we were mentioning on the cues could be some struggle, right? There can be some resistance up here. We could head still up towards this if we're able to turn this MACD around, but you're going to notice how much trouble we'd have to go through. So we have to see some very good data coming out over the next 2 days and shake off whatever happened today. But I don't know if it's going to shake off that easily, as we are closing at the end of the day very, very low towards the lowest price point of the day. On the cues, we were still talking about closing some kind of cup around this area and getting a handle, maybe even by the end of this week. So this is what we were overall paying attention to on the cues. As of last night when we saw this trickling up, yes, we said we could have got that reaction, and then maybe we reject from there, close this cup and get some kind of handle around this area. It's a little bit messy, like, right, we just trailed upward more. We didn't get as much structure in this move as the SPY. So that's really what I see in this case. And if you did get that to play out, you would go into a good form of liquidity for some kind of bounce. So if we're going to keep heading lower from here, you're most likely going to see some kind of cup and handle setup. And if we're actually going to head higher, you're going to need this MACD to turn back around and get back into positive territory pretty quick with some good data over the next couple days. A little different, we're going to throw IWM, and overall what we were talking about on IWM last night was the fact that from this area we get rips to the upside, and from this area we get rug pulls to the downside. We get rips, we get rug pull, we get, almost to there, we get rips, we get rug pull, we get another rip, we go to the very top of it, actually break out of it by a few cents there, and then we see that signal, and that's the important part, right? At this area, this is the highest we really went the last time we were in this zone, and we saw that rug pull. So we had to pay attention up here, and all I was doing was looking at, hey, a 30-minute. And guess what? The 30-minute is telling you there is divergence up here, there's weakness, so something could happen to break. It's just a point to pay attention to say, hey, I need to be a little bit cautious up here. I want to be clear, I wasn't saying, oh, this has to go down forever. This still could have some moves to the upside left in it. You could see some kind of right shoulder with this move, right? We could see that setup. We actually could see this as kind of like what we talked about Apple does. Apple likes to come out of this, zone, and then it likes to bounce in it to then head higher. So you still want to be careful on this. And the reason that I'm overall saying that, even though we are closing at the end of the day, and a lot of the probabilities are that we're going to open up lower, is we do have data coming out, and people have been very bullish on every data drop, and the 30-minute on IWM isn't in that negative territory as of right now. So you really need to cut out this low, make one, get some kind of bounce, and then make another one to really get me bearish on all these stocks. Apple, we actually talked about in that afternoon video, so do subscribe, do, put on those notifications so because I'll randomly put out a video in the middle of the day if I see something very important, but if it is very important, I'm probably posting it on Patreon if I see it, okay? So if you're a part of my Patreon, thank you, but we were paying attention to this trend right here. We were really paying attention to this trend. We were struggling to break down, and I said, once we do get a full daily close out of this, it's a good sign that we're setting up that negative trend. Right now, we're seeing that trail up, we curl back down, we're in negative territory. So if we do exceed this low here, we're going to get deeper into that negative territory. And as we are closing at the lows of the day, we can see this gap down and head towards this zone. So we really want to pay attention to what actually happens at this zone, but we could head to lower levels in the very near future if that data doesn't help us out tomorrow. I'm just telling you, Apple's one that all of my signals are saying is going down, right? This is where I flipped to bear on Apple just because we're seeing this divergence here, and we're seeing that crossing of the MACD confirming it. We're seeing that on the RSI at the same time, which is a very, very strong indicator. So I really think Apple will get down to this price point right here, about 187.50 is what I'll say. I think this point right in here would be a good place for a bounce. We're within this zone, right, that we actually kind of ripped down from a few times, but you notice when we're able to close above it, we see that rip to the upside. So that means that this zone right here is very important. We consolidated in it, and maybe we actually use that to head higher. So what we want to pay attention to on the daily scale, if we keep selling off, is if this MACD is able to roll up again in positive territory. That's very important, because if this is able to come down into this level and then roll back up, you might see another move in Apple. So we really have to pay attention to that to the upside. But if we're going to break down from here, that bounce actually could be short-lived, and we could actually set up a bigger head and shoulders and head to lower levels. Amazon's one that I actually did post to Patreon, and I showed you this right here. And this is one of my favorite signals. When you do get some kind of divergence outside of this weekly range, this is the upside of that weekly range for Amazon, 154.88. So that's all options has priced in, and 68% of the time you're going to close within that range. Okay, so we expected some resistance in this level. We saw it once, we popped above it, we saw it twice, we popped above it, we saw it a third time, and that was the end. But overall on Patreon, I just posted that there is a 15-minute divergence. Now, it's not the best divergence in the world, but it just means, hey, you have the potential here for some kind of pullback on the 15-minute and for the 15-minute to go into a negative trend. And guess what? A couple hours later, that's exactly what happened. We have a 15-minute negative trend right now on Amazon. So if this does get some kind of bounce, you would really want to pay attention if that's actually able to curl back down and keep that negative trend. The next thing on Amazon I really just wanted to point out here is the fact that we do have a divergence on the MACD, but you don't have that on the RSI at the same time. Okay, so you don't necessarily have that on the RSI to match that MACD, but it is a good sign that this is at least going to pull back. And where could it really pull back to? I still like this level of 134.48, but because I think Apple might hold up at that level that we were talking about, I'm really looking at this in here. This is a lot of price action, and most likely you're going to see some kind of buying in this area. And we kind of have to see if it's going to do what I was talking about on Apple. Are we going to see this not be able to curl back up and set up some kind of right shoulder in this area and then head to lower levels? Or are we actually going to see it curl back up and get one more move into January? So right now on the daily, my signals are not fully flipped to the bear side, flipped to the sell side for Amazon, but the shorter time frames, they really are. Now, Tesla was something we were really paying attention to in this afternoon's video because we just noticed that there is divergence all along here, and all of it lines up, right? All of it lines up with the RSI. You get down, down, and then flat. So you do have that lined up throughout the entire thing on the MACD and the RSI at the same time. And all we said was pay attention to this little trend in here, because most likely you're getting some kind of weird, little head and shoulders up in here. I don't know if I'd really consider it a head and shoulders. I would just say this is a good trend line, and you do have that steep divergence right next to negative territory. And look, we get into that negative territory, we try to bounce up, we confirm that we're going into negative territory, and the rug gets pulled. Signals have flipped to the bear side as of right now on those shorter time frames for Tesla. But as you can see, even though we're closing at the end of the day, I'm not fully going to be bearish on this until we close beneath the 9-day moving average. I really think we need to close beneath the 9-day moving average, and then I assume later on we're going to get that confirmation on the MACD. Really looks like Tesla is about to head, for this little channel in here, but we could see this as some kind of big left, some kind of head, and then we might come into this area that was very important. We've been talking about it for a while, so we could head into this area pretty quick and then get some kind of right shoulder that then sets up a lower high and starts that negative trend on the daily for Tesla. Now, Nvidia on the daily, we were mainly talking about how the SPY actually continued to go like this, right? The Qs continued to go like this, but why is Nvidia not participating in that move? Yes, we were talking about how you could go to the bull side, we could see another run, but I kept saying in my videos, be very careful up here, because we're seeing a lot of reversal signals, a lot of things that could pop, like the VIX getting really tight. And so it's not the best time to take a trade. It's maybe a better time to kind of sit on your hands and just wait for an easier one. You're closing at the low of the day. You lost the 9-day. So as of right now, my signals are pretty dang bearish. And if this is able to cross right here, you look how close you're able to get into that negative territory. As far as the daily goes, you can see some rapid downside, and we might head towards this zone right in here, right around that 422, 428 level very quickly. So if we do see some kind of selling, maybe the scenario we were talking about pretty early on in the week is actually going to play out for Nvidia on the shorter time frames. This is an hourly here. We were talking about some kind of left and that head, and then we pointed out our little point here, which was kind of our last line in the sand. So if we do come into that area with that selling continuing into tomorrow morning and we bounce, maybe to fill the gap, and with that GDP data, look for that to roll back around, because if this is able to pull down a little bit on the MACD and then roll back up and then roll over again, I believe this drop will be pretty significant, and you'll get well within that negative territory on this shorter time frame, being the hourly. This is where I wanted to talk about those yields, okay? We were talking about for the last week or so how we're pricing in a lot of rate cuts. The bond market is telling you, hey, something isn't right here, and we actually need 150 basis points, and now they're pricing in even more than that as of next year, which overall, people are confused why this downturn is happening today, and this is something we've been paying attention to. If everything is good, if we have a soft landing coming, then why is the bond market saying we need to cut these rates really quickly? And usually that means that something in the system is going to break, or on the potential of breaking, and we need to cut these rates very quickly. So the fact that no one can point this out is actually a very scary thing, because it could mean something in the system is very sick, and we're about to see what that is. Now, there are a lot of people with the narrative of it's just people running to safety. They're running to safety. Okay, but why? Why would they run to safety now? No one can explain it. If we had a reason for people to run to safety, I would be a little more convinced. But at this point, we're just seeing that the bond market is kind of telling you, hey, something is sick and we need these rates to come down fast, or we could see something very, very bad in the economy. So we really want to pay attention to this. I mean, I could be wrong, and this could just be people randomly flying to safety, but it's very unique for people to randomly run to safety. Even though we did get some dramatic selling, right? Some dramatic selling. We didn't see this crossing of the MACD on the dollar, right? We were pointing out this divergence. So there is, the door is open for something really bad to happen, because you do have divergence on the daily MACD, on the RSI, on the dollar at the same time. And we've just been pointing this out for the last few days. Now, we did say that because we do have GDP, we could head sideways, maybe get some kind of reaction down into this area to bounce off of this little, support line, this little trend line here. So maybe that does happen as of tomorrow, but the most important piece of data is actually going to be Friday, because that's what the Fed overall uses to really tell what is happening with inflation. Yes, we do get that GDP growth rate, and that's supposed to come in at 5.2. So if you're a consumer right now and you don't like where prices are, well, guess what? The economy is still growing, and those prices are probably going to go up, because we just said we're doing rate cuts. that's something to keep in mind for tomorrow. The other thing I just wanted to point out was the core PCE is the main thing that the Fed pays attention to for the inflation. Okay, so for their inflation readings, they really like this core PCE, and we have to pay attention. If this sees a tick up on Friday, that could be very, very bad news. And I snuck that little bit of data in there so I could give you guys the finale. And we were talking about how the VIX is getting even tighter and tighter, and you're just, inviting inflation to come back into this market with a big move. And guess what? We close above the 9, we close above the 20 at the same time, and we're going to start spreading out these Bollinger Bands. Now, this does allow for bigger swings, so we could see this swing down, swing up, but overall, this is the signal you've been waiting for. The VIX is saying to you, and thank you so much for subscribing. Someone just subscribed. Thank you so much for subscribing. But the VIX is going insane. So if the VIX is going insane and it's not up by 10%, you do not have that, percentage of some kind of, up day in the next 2 trading days. This thing can just keep going. The main takeaway is, I'm getting a little bit excited on a few charts. When I see the VIX pop like that, when we've been talking about it for a few weeks here, and we see those Bollinger Bands getting really tight, it means we're inviting something very bad to happen. And the fact that no one can pinpoint exactly why this has happened at this point is a little bit scary, and it might just be the bond market telling you, hey, something in the system is about to break, and we got to flip the script real quick. Also, I just wanted to say, don't get overly bearish, don't get overly bullish, because now we do have those Bollinger Bands a little more spread out on the shorter time frames, so you can see bigger swings in this market. We could see that swing up with GDP and then drop with PCE, so don't think that everything has to crash down to 0 tomorrow. It can take some time. Thank you guys so much for watching. I really appreciate it. And thank you if you actually tuned in for my midday update. I really appreciate that. I was wondering how posting a video in the middle of the day would go, and a few of you guys were able to catch that. So I hope it was helpful. But right now, I just wish you all the luck in the world trading these last 2 days of the week. And I hope you stay safe out there. Make sure to manage your risk, and have a good night. Peace.